Good morning. It's another day, another business morning coming to you. Thank you for joining us. I'm Ini John Mekwa.
And I'm Chimeze Obi Iwagu. Well, starting off on the global scene, as ministers and governors under the Group of 20 have agreed on the final extension of the debt service suspension initiative by 6 months until the end of December 2021. The DSSI, which took effect on May the 1st, 2020, was extended to June 2021 and has delivered about $5 billion in relief to more than 40 eligible countries. A communique issued after the G20 finance ministers and central bank governors also called on the IMF to make a proposal for a new special drawing rights general allocation worth $650 billion to meet the long-term global need to supplement reserve assets.
Meanwhile, the International Monetary Fund has warned developing countries that the various invention funds received to cushion the effect of COVID-19 pandemic have consequences. According to the director of the Monetary and Capital Markets Department at IMF, Tobias Adrian, extraordinary policy measures have eased financial conditions and helped to contain financial stability risk. But those rescue efforts may have unintended consequences and sow the seeds of future financial market instability. It says addressing corporate sector weaknesses and repairing balance sheet is a priority, and emerging markets should rebuild buffers to prepare for potential repricing of risk and a reversal of capital flows.
And back here, the Department of Petroleum Resources says it has revoked 4 oil mining licenses belonging to Adex Petroleum due to the non-development of the assets by the petroleum company. A statement by the regulatory agency says the affected assets are OML 123, 124, 126 and 137 as they have remained underdeveloped, leading to loss of revenue to the federal government. The statement, which quotes the DPR's director, Mr. Saki Anwulu, says that the licenses have been awarded to Kaztech Engineering Limited and Salvik Petroleum Resources Limited. He explains that OML 122 and 124 are to expire by 2022, while OML 126 and 137 will expire in 2024 and 2027.
Well, away from the oil industry, the Bank of Industry is encouraging states to partner with it to advance small and medium-scale development across the Federation. Already partnering with 25 states, the BOI is further aiming to expand collaboration with Kebbi State, particularly in rice production. The Managing Director and Chief Executive Officer of the BOI, Mr. Olukayode Pitong, who led senior officials of the bank on a courtesy visit to the governor of Kebbi State, further discloses that the bank raised ₦2 billion under the pandemic. Let's see how it happened.
Senior officials of the Bank of Industry, led by its Managing Director and Chief Executive Officer, Mr. Olukayode Pitong, met with the Kebbi State Governor in Abuja. The core mission of the BOI team is to deepen investment in Kebbi State.
We would like to see a lot of more viable businesses in Kebbi, not only Kebbi, but all parts of the country.
Already, there has been a cordial relationship between the Bank of Industry and Kebbi State, as well as a significant investment to the tune of 3.9 billion naira. After the meeting, the Kebbi State Governor, Atiku Bagudu, notes that the partnership will advance industrial growth.
In Kebbi State, we have been very, very lucky that apart from their support for private sector companies that are playing a prominent role in Kebbi, they have also partnered with the state government to expand the offerings in the state. We believe they have a lot to offer to us. We are promoting entrepreneurship, particularly small and medium enterprises, in a number of areas, particularly processing, mining, renewable energy, and promotion of gender.
The BOI boss disclosed that operations of the bank was not particularly affected by the pandemic, as it raised about $2 billion during the period. He reiterates that the BOI is willing to commit more funding to as many states as possible to boost local businesses.
The idea is that any state where the governor is interested in helping the SMEs, we are telling them to put their money down. We'll match whatever they put down. So Kebbi gives us ₦1 billion. BOI will put ₦1 billion, which means we are adding, about 50% of the risk. We are taking it.
The Bank of Industry partners with Kebbi State, among others, with the sole objective of continuing provision of long-term financing to struggling businesses across the country.
Well, debt sustainability in Nigeria has remained a major concern. Based on the debt statistics published by the National Bureau of Statistics and Debt Management Office, Nigeria's gross debt rose by 20.1% to 32.9 trillion naira, while the federal government's borrowing advanced 23.4% year-on-year to 26.9 trillion naira in the fourth quarter. What is the implication of this, even as IMF revises its growth forecast for Nigeria? Akintoye Oyelaku will speak to us about this next. Akintoye Oyelaku is an investment analyst at Cordros Securities, and he joins us now. Thank you very much for joining us. Good morning, Akintoye. Good to have you on the show.
Good morning. Thank you.
So Nigeria's debt to GDP ratio increased to about 21.6% in 2020 from 18.8% in 2019, while debt service to revenue ratio worsened to 83% in 2020 from 50.7% in 2019. What is your take on these statistics?
Oh, well, thank you. So the major contributor to the growth that we saw in debt profile for the country has been the COVID-19 induced borrowing. So due to the emergence of COVID-19 and the negative impact, we saw Nigeria borrowing, increasing borrowings both locally and externally to support the economy amid the negative impact of the virus. So also when you consider the fact that in 2019, the exchange rate at the official window of the CBN was 306 naira. It increased to 379 naira to the dollar in 2020. This also led to the increment that we saw in the external borrowing, which also trickled down to the total borrowings of the country. Again, looking at the debt to GDP ratio of 21%, this is still far below the IMF's sustainable threshold, which is at 14%, indicating that Nigeria is not optimizing its borrowing at least in 2020, looking at that data. However, when we consider the debt service cost to revenue for 2020 also, it stood at 83%, which implies that out of every 100 naira that the federal government generates, around 80% is used to service debt, which also implies that Nigeria's ability to fund capital expenditure is very weak, and our growth potential will still remain very weak, at least in the future, in the near term. So looking at this, the basic fact is that Nigeria needs to expand its revenue generating capacity in order to be able to optimize the borrowing threshold set by the IMF.
So you talked about the IMF forecast, which they moved from 1.5 to 2.5. But what would this rising debt mean for Nigeria's growth trajectory?
Well, what it simply implies is in order to be able to sustain capital expenditure, we may need to resort to borrowing. But with the level of revenue that we have, it's currently weak. Even at the 21.6% debt to GDP ratio, being able to finance this debt conveniently has not been easy. So the major factor here is there's a need to expand this revenue generating capacity through policy reforms, which could drive in investment in those critical sectors of the economy.
Now, the IMF projects 2.5% growth rate for Nigeria. How much of a confidence booster is this for the much needed investment inflows, and what could be the downside risks to this positive revision?
All right, so the basic revision came as a result of the rate of vaccination. Looking at what the projections for the world was in January, during that period, we haven't seen much of this rate of vaccination. However, with recent data, we are seeing that across the world, especially in the Europe region, we are seeing a lot vaccination going on there. Also, looking at it by country, Israel has vaccinated the most people per 100 citizens, while the US is also trailing. Also, considering this, the global data, with the level of fiscal stimulus that the US has approved, $1.9 trillion, this will also go a long way to support the global economic recovery. Although Africa is still lagging, we are still seeing that the rate of vaccination has continued to improve. In Nigeria, about 4 million doses of vaccination has been secured. However, looking at the fact that in the fourth quarter, despite the challenges of the COVID-19 pandemic, Nigeria managed to recover from the recession by growing by 0.11%. So this trend is expected given that the COVID-19 restrictions have been eased relative to most of the 2020 period. So we believe that on the back of this, we are going to see sustained positive momentum, especially as the global market has continued to show signs of recent. In Europe, we are seeing increased manufacturing activities, while in the US also demand for commodities has sustained an improvement. So on the back of this, the oil market will likely see recovery in the near term, while the non-oil sector will continue to remain resilient. So based on this, we are predicting a growth of 2.75% for Nigeria in 2021. This is slightly above 2.5%, but we still believe that the 2.5% is likely achievable by the country. Also, looking at the downside risk to this projection, given the fact that vaccination rate is still very weak, we might not see enough vaccination go on in the near term. So this might affect the potential for Nigeria to reach this growth projection. So basically, leaving the downside risk apart, we believe that with the current trend, if the current trend persists, Nigeria is certainly going to be able to achieve that growth projection.
Well, interesting. I mean, even as Codros, your projection is higher than that of the IMF. And I know our guest on Monday had said 2.54. Well, we'll see how that goes. But on the debt issue now, the ongoing IMF World Bank spring meetings, the issue of extension of debt servicing under the DSSI was talked about. And is Nigeria part of this? And if so, how will it benefit the country?
All right, so the purpose of this DSSI agreement is just to help low-income countries, of which Nigeria is also part of. And this will help to ease the burden or ease the financial pressure on the country, given that in 2020 we saw a significant increase in the level of debt borrowing, both locally and internationally. Based on the estimate for 2021, Nigeria is budgeting around 3.1 trillion for the servicing of debt. And given the fact that around 40% of this debt is from external sources, and the IMF and the World Bank form a large chunk of the external borrowings, we expect this to be very positive for the country's external reserve. We believe that given the fact that the external reserve has been very much weak amid low oil pricing, so we believe that this news will be positive for both the external reserve and also the financial status of the country, and it will help the country to focus on other critical sectors to recover from the impact of the COVID-19 pandemic.
Let me take you back to the growth projection. Yeah, quite optimistic there by the IMF and, of course, Codros. But then the IMF raises another concern about the unequitable distribution of the vaccines. Yes, we know that the vaccines are being, distributed, but then there is this concern of a lot of people not getting it, a lot of countries. For instance, you did mention African country and indeed here in Nigeria. And of course, this morning we saw the news, of course, EU medicines regulators and even the UK, find possible link between AstraZeneca COVID vaccine and blood clots. And of course, this raises some kind of worry for people, a lot of people who are even skeptical about taking this vaccine. For you, as an investment analyst, for you looking at the market, is that a concern, or should that be a concern for us here in Nigeria? I mean, the vaccine we have here is AstraZeneca.
Yeah, of course, the news is a negative one, and it will definitely have a negative impact on the rate of vaccination across the world, given the fact that AstraZeneca is one of the leading vaccines in the global space right now. But however, in Nigeria, we have not yet seen a lot of complaints about this discovery about the COVID-19 vaccine. But what it means is that Nigeria will have to look for alternatives. If you want to recover from this pandemic, we should look for alternative COVID-19 vaccines to be able to boost the recovery from the negative impact of the COVID-19 pandemic.
Okay, so the DMO has just released the bond auction calendar. Since the last auction, the financial market has sustained bearish trend following the uptick in the average stop rate. Both the equities and the domestic bonds market closed bearish last week, while the money market recorded moderate gains. What is your assessment of the markets in the first quarter that just ended and your outlook as we begin the second one?
All right. So in the first quarter, despite the dovish stance by the monetary authority, we saw that at the auctions, yields trended higher, and this drove the bearish sentiment across market. We saw a repricing of yields in the fixed income space, especially due to the increase in the stop rates for the money market. So till now, we have continued to see that sustained upward trend in the yield environment, and this has made the fixed income space more attractive, while the equities market, although it's recorded gains in the first month, that was on January, it has suffered losses in the subsequent 2 months. So the equities market was slightly bearish in the first quarter, while the bond market also recorded bearish performance due to the repricing of yields amid increasing stop rates in the money market. So in the second quarter, we expect the performance to still remain relatively the same. We expect yields to continue to trend higher. However, the major factors that will shape the performance will be what the outcome of the auctions are. If yields continue to trend higher in the primary market, we expect the secondary market to reflect this. Overall, we expect the yields in the physical space to continue to increase, while we expect the sell-off to continue for the equities market. However, what this means for the equities market is that it creates an opportunity for fundamentally sound stock. Investors could position the fundamentally sound stock that are expected to perform well in 2021 and beyond, due to the fact that the lower the pricing of these securities, the more attractive they are, that dividend yields is going to be.
Thank you very much, Akintoye, for sharing your time with us this morning. We do appreciate it. Thank you. Enjoy the rest of the day.
You too.
Akintoye Oyelaku is an investment analyst at Cordros Securities.
Welcome back. Well, now we'll go to the commodities market, starting with oil. Oil prices fell this morning after official figures showed a big increase in U.S. gasoline stocks, causing concerns about demand for crude weakening in the world's biggest consumer of the resource at a time when supplies around the world are rising. Brent crude is 36 cents to $62.80 a barrel. U.S. oil fell 38 cents to $59.39 a barrel, while crude stocks in the United States fell more than forecasted by analysts. Gasoline inventories jumped sharply also against expectations. Oil inventories dropped by 3.5 million barrels last week to nearly 502 million barrels, while gasoline stocks increased by 4 million barrels against expectations of a decline to just over 230 million barrels as refiners ramped up production before the summer driving season. Iran may see some sanctions lifted and add to global supplies, with the U.S. and other powers holding talks on reviving a nuclear deal that almost stopped Iranian oil from coming to market. Still, the International Monetary Fund said earlier this week that the massive public spending deployed to combat the COVID-19 pandemic may increase global growth to 6% this year, a rate not achieved since the 1970s. Well, to talk more on the commodities, we have Bolanle Agbaje. She's, good morning, Bolanle. Thank you for joining us.
Good morning.
Yeah, she's research analyst from Financial Derivatives Company. Thank you so much for joining us this morning.
Thank you for having me.
Yeah, so FDC projected that by next week we're expecting the NBS to release the inflation for the month, and you have projected 17.8%?
Yes.
What are the factors
driving this? Yes, so our predictions for the month of March is 17.8, which is more or less the highest level in 4 years, which is significant. Most of the drivers, or the major driver that we've seen with this, will be the currency pressure. We've spoken about this times without number. The fact that, exchange rate has depreciated significantly in the parallel markets, currently trading at about 480 to 485 naira to the dollar. This has literally posed, a significant strain, on the workings of the manufacturers. The costs generally has increased significantly. They struggle with, forex access. There's, forex restriction. The fact that, about 20 to 25% of their forex is sourced with the CBN, and then about 75% is sourced from autonomous sources like the parallel market, and that has, more or less increased, their costs significantly, and that has more or less, translated to lower output. So manufacturers are really struggling. We've seen reduction in supply as a result of that. We've also seen the insecurity in the food belt as well. We've spoken about this from, I think, the month of January. It actually increased, its intensity in the month of February as well. So we're seeing, most of these farmers get back to their regular mode of, increasing production. And right now we're entering the planting season as well. So it's most likely a suggestion that inflation is going to continue to climb, because all the factors are pointing towards that. And on the demand side, we're seeing disposable income continue to be squeezed. Even though, we're seeing increase in demand because of the Ramadan festival, it's nowhere near, what we had seen in previous years.
Now, given this high level of inflation, what do you think will be the next move of the Monetary Policy Committee?
So right now, it means that, the rate hike that we've asked for is now not just only imminent, it's inevitable. I don't think the CBN would watch, inflation continue to climb. We've had, numerous advice from the likes of the World Bank, the IMF, most of these advanced economies are currently, working on controlling the inflation numbers and keeping inflation below target level. Currently, our inflation is about 100% above our target level of 9%, which is not great. So I'm certain that, in the next meeting, because I think in the last meeting, only about 33% of the MPC committee members, voted to increase, interest rates. So I'm sure that we would have more of that in the next meeting, and most likely, a rate hike.
So the IMF has revised the growth rate from 1.5 to 2.5. What are the factors that you think will drive this?
Yes, so, earlier this week we had seen, the World Bank increase our, growth forecast. In line with that, the IMF has also done, the same, although their numbers are much higher. They quote that, we've seen a speedy recovery when it comes to oil prices. And in this part of the world, we've been able to contain, we don't have the levels of, deaths or mortality rates that we had seen, in most advanced economies. However, they highlight the fact that, as much as you're seeing absolute growth, you're also seeing, there's also the risk of seeing uneven recovery, which more or less means that as much as you have uneven recovery amongst countries, so, increase in the level of increased level of income inequality amongst countries, you're also seeing income gap increasing within Nigeria as well. The poor would get poorer, the rich would get richer, and that's not really great for, the economy. So as much as you're having absolute growth, you need to also, the governments need to actually focus on improving living standards within the
Now, do you see this growth forecast by IMF and World Bank also being one of the considerations that the monetary policy might possibly be taken when they meet?
Yes, so if it's positive for them, the fact that, the IMF is predicting, growth to increase to this significant level. So it means that, the CBN would move its policies, to shift its policies to more or less price stability, which is a cause for concern now. I'm sure they left interest rates the way it was because they wanted to see how, growth would, pick up and ramp up itself from the previous year. But at this point, I think price stability would be their main focus.
What are the downside risks that, you see there? Because, the IMF talked about the unequitable distribution of vaccines. And, of course, you did mention the inequality, which, of course, they also raised. And we are seeing another concern about the AstraZeneca vaccine, which of course
and
we are taking majorly.
Some people
taking it, and
get
now,
a jab
you know,
at all.
That the link between you know, this jab and blood clots.
Yes.
You know, which regulators are really finding some kind of truth in.
Well, the IMF did highlight that, you know, the risk to this growth numbers that they've predicted has to do with the risk between the virus and the vaccine. So definitely they had already considered, you know, these issues of people not trusting the vaccines that are going on out there and all of that. But currently, I think about 600,000 people have already been vaccinated via the AstraZeneca vaccines. But also we're expecting the Johnson & Johnson vaccines as well. So I'm sure that would, you know, make people feel more comfortable, because I think that, you know, has a higher, you know, rate of curbing this COVID.
And you take it just once.
Yes, you take it just once. So I'm sure it's good news for Nigeria, and it would more or less remove the narrative from the whole, you know, blood clots. I think so far, I don't know if there has been any complaint about that in Nigeria, and you know, that's more or less what we're focused on.
So how do you see this forecast, you know, impacting the commodities market?
Well, it's great for the commodity markets in the long term. However, when we're looking at commodity prices, we usually focus on the short to medium term. And currently, what we're seeing now is the fact that, you know, we're entering the planting season, at least for the next month. We are, you know, the Ramadan season is also kicking off. Currently, commodity prices have spiked up significantly. We're also seeing supply shortages as well. We haven't seen any, you know, although even if the central bank does come in and reduce interest rate, increase interest rates rather, and, you know, try and, you know, put in more policies to help alleviate these extra currency pressures, we definitely see that. We definitely would see, you know, supply ramping up in the short to medium term. But currently, commodity prices are skyrocketing.
Okay, so take us through the price movements for today, and are we likely to see an increase in prices?
So when it comes to our domestic commodity prices, definitely an increase. I think with the exception of palm oil is, the price of palm oil has actually declined just because of the seasonality effects. I think this is the season for palm oil, and that has increased supply within the market. I think that and cement, those are the only two domestic commodities that we have great news for. But other staples like rice, gari, all those have increased significantly. Tomatoes, pepper, those have increased significantly. And looking at going to the global commodities market space, wheat, cocoa, corn, sugar, wheat has actually declined in price, which is great for our export reserves, or export revenue rather. Corn has actually increased in price, and cocoa in particular has increased in price. One is the factor that I had mentioned earlier this week about the fact that there has been low rainfall, and that has more or less realized the fact that supply has actually declined within Nigeria, and also the increase in demand in India as well has also supported the price of cocoa.
All right. Going into the new week, what's your outlook? Both agri-commodity and, of course, oil. We have seen the trend oil has taken this week.
Yes, so for oil, we expect oil to keep trading between about $60 to $63 per barrel. We have the supply, increase in supply that has also, more or less reduced prices in the past few weeks. The boosting, which is more or less great for Nigeria anyways. And the pickup in demand is quite slow, but it's something that we expect to, increase in the near term.
All right, thank you very much, Bolanle. We do appreciate your time.
Thank you for having me.
All right, Bolanle Abaje is one of the research analysts with financial derivatives. We'll take a moment. We'll be back. Well, yesterday we saw a marginal increase of the equities market. Let's see what drove that market yesterday with Eddie. Good morning, Eddie.
Good morning, Chimi. Well, we have Dangote, sorry, I beg your pardon. We have MTN Nigeria and we have Nestle to thank for those gains. However, we saw huge declines from the banking sector. So the 1.1% increase we saw on MTN Nigeria and the gains we saw from Nestle just helped to, cushion some of those effects. The market was up 0.02% at 38,774.03 points, while the equity cap was at 20.286 trillion naira. Now, the month-to-date return is currently at minus 0.7%, while the year-to-date return is at minus 3.7%. Volume value and deals traded yesterday were much higher compared to the previous trading session, as we saw volume rise by about 58% to 356.46 million units, worth 4.19 billion naira, which was also higher by about 84%. And all of that was traded in 6,130 deals. We saw Zenith Bank as the highest, or we'll just go back to that. Zenith Bank was the highest by volume and value yesterday. We saw Zenith Bank contributing over 1 billion naira to the total value traded. In the sectoral performance, it was mostly negative, apart from consumer goods, which was up 1.88%, and that was due to the 3.27% gains from Nestle. We also saw gains from flour mill yesterday, which pushed the sector up. The banking sector was down 3.12%. We saw declines from almost all lenders, apart from Jai's Bank and Stanbic Bank. Now, Jai's Bank was up about 10% yesterday, while Stanbic was up about 3.14%. But all the other lenders posted losses. Zenith Bank was down, GT Bank was down about 3%, Zenith was down by about 4%, Access, UBA, Union Bank, and the rest of them were also down. Industrial goods was down 0.34%. Now, we saw declines from QTIX, that was down by about 2.22%. We saw declines from the insurance sector, which was down 1.71%. And we also saw declines from the oil and gas counter. Now, the unlisted securities market was positive yesterday. It was up 0.13% at 749.57 points, while the market cap was at 532.80 billion naira. We saw about 109,420 units worth 27.09 million naira traded in 7 deals. Now, the bond market continued its bearish run yesterday, as we saw yields increase in that space by about 13 basis points. Now, we saw yields at the short end remain flat, while the yields expanded at the mid and the long end. Now, we saw some demand on the November 2029 bond. We also saw similar number of deals at the July 2034 and March 2036 bonds. There were 40 deals worth 64.70 billion naira in that counter. The Nigerian Treasury bills market was quiet yesterday. We just had we saw one trades on one maturity, and that's the March 2022, and we saw yields in that space close flat. So there was really no movement compared to the previous day. There were 8 deals worth 7.58 billion naira in that space. We didn't see any activity at the CBN special bills market. The OMO bills market was also positive, or say bearish, because we saw yields rise in that space by about 12 basis points. Now, we saw more demand at the March 2022 and February 2022 bond. So we saw increases in the long end of the curve, while the short end was flat at that segment. There were 30 deals worth 207.10 billion naira. Now, I'm sure investors will still be focusing on the bond calendar that was released by the DMO. So we're going to be seeing, what is going to be happening in this quarter, for the second quarter of the year. We'll just see investors, especially at the Treasury bills market, yields are not really on the rise in that space. The bond market, however, we're seeing increases in that space. Hopefully we'll talk to someone to tell us what is really driving sentiment in the bond market, or the fixed income market, and why we're seeing increases in that yield, but in that space. But as long as we see rise in yields in the fixed income market, investors at the equities market are also waiting, because right now there's really no fundamentals driving sentiment in that segment of the market. We've seen the earnings season come and go. There's another earnings season coming, but then we're not really, how do I put it now, we're still waiting for that to come. So for the meantime, investors in the equities market will be looking at the macroeconomic space to see what stimulus will be coming from that segment and how that's most likely going to impact sentiment. But then as it is now, we're still likely to see the bearish sentiment continue in the equities market. You have investors who are, should I say, risk off with the declines we've been seeing. Some people just want to cash out on whatever it is that they've gained and probably just go put their money in the fixed income space, because as it stands, you're gaining more at the fixed income market compared to the equities market, where investors are really losing money. So Chimi, we'll see how things play out. We'll keep watching to see how this market is. As you and I know, it's very unpredictable.
Some kind of positive catalyst that perhaps will boost investors' confidence back in the equities market. Not even the outlook reversal by the IMF. It's actually spurring investors' confidence, but maybe because there is no fundamentals, there, even though we're seeing positive outlook there, but a lot of people will say, okay, what's...
At the same time, how does that translate into the growth performance of the companies that they're investing in?
Absolutely. Anyway, we can only keep our fingers crossed and see how that goes. We'll take a break now. When we come back, we'll do an opening call to London.
And now we go to London, but just before we have Juliana coming on, well, Chimi, a whole lot of things are happening in the UK. Like you talked about this morning, the issue of the AstraZeneca and finding a link between it and the blood clots. I mean, at first it was like just not something that doesn't have any proof. So I wonder how people react to it now.
Well, what would people really do? The essence of it is that for them to really find what exactly is the issue. There's still, some kind of disagreement in this whole thing. So a lot of people still see some of the issues there as a conspiracy, theory there. So we're yet to see exactly where.
Yeah, they're still finding out. Well, I guess we have Juliana now. Good morning, Juliana. Good morning.
Ini, good morning, Chimese. Can you hear me?
Yes, we can hear you. You're talking to Ini.
Excellent.
Okay, so we're just talking about AstraZeneca and the blood clot. But, I mean, before we go there, one constant thing through the coronavirus crisis has been the willingness of the Federal Reserve and other central banks to stand behind markets. They were at it again last night in Washington with minutes from the latest monetary policy meeting, giving the soothing message that support is here to stay. The Fed said it's expected to lose monetary policy for some time until conditions improve sufficiently. How are the markets responding to this?
Well, it was certainly a boost to international market sentiment. We saw that the FTSE all-share opened about 0.3% at the open, and we had similar gains across Europe. I think traders have understood that there'll be no early exit from loose monetary policy, and that's even with a stronger outlook on growth, employment and inflation. We've seen that not just in the world's largest economy, but also here in Britain. And I think the Fed's comments certainly match what we had out of the IMF at the beginning of the week, which basically took off its hat to global economies that have stimulated their economies and made sure that individuals are kept, if not at work, certainly paid.
Talking about the possible link between AstraZeneca and blood clots, what are people saying about this? I mean, how is it being viewed, especially when you put it side by side with the outlook from the IMF and the World Bank?
Well, Downing Street have played down yesterday's significant announcement, and I certainly think that it could complicate the inoculation programme. Yesterday afternoon, the UK pretty abruptly changed its guidance over the Oxford AstraZeneca vaccine, basically recommending that people aged between 18 and 29 be offered an alternative. Officials confirmed that there is an actual link between between rare blood clots in the brain and the AstraZeneca jab. We've got to be careful because we know that millions upon millions of doses have been given out safely. In the UK, there's been 79 cases of this blood clotting. 19 individuals have died. 3 of them have been under 30, 51 women, 28 men. So if you look at the scale between those who haven't had any side effects and those who have died, it is such a small margin. But UK officials are not taking any further chances. And of course, this is a long-running story. I know I don't have the time to get into it, but it is a significant change in policy.
Obviously. Well, away from that, hundreds of Deliveroo couriers mounted protest against the treatment by the takeaway delivery group yesterday as the company marked its first day of open trading on the London stock market with shares rising. What's the latest on this?
Well, yesterday, Deliveroo riders rode through the streets of London waving red flags. I actually saw a couple of them, and they said, you know, that they're striking against poverty wages and gig economy exploitation, which has been in the news over the past couple of months, particularly since Uber won that pretty monumental Supreme Court case about making their contractors full-time staff. The protests yesterday were organised by the Independent Workers' Union of Great Britain. I mean, this is because an investigative piece done by the Bureau of Investigative Journalism found that some riders were earning as little as £2 per hour. Deliveroo have always refuted these findings, and they said that their staff are happy. But for them, yesterday wasn't really much of a bad day, considering that their stock price finally rose after it flopped last week. But yeah, yesterday was that demonstration, and we're expecting more demonstrations in the coming months.
Wow. Thank you so much, Juliana. Well, enjoy the rest of your day and please stay safe from the protests and all. Well, we move from London now to crypto. Crypto market has a lot of activities, and Ladi's here to give us this.
Hello, Chimi. Well, the market Bitcoin still ranging at this point. Market cap $1.93 trillion, down about 2.09%. 24 volume, $210.60 billion, down about 0.36%. Bitcoin dominance, 55.48%, added about 0.32%. Let's talk to Adebayo Juwon now, market analyst. Hello, Adebayo. Great to have you.
Hi, Ladi.
Good morning. Yeah, so, Joe, we have over 200 exchanges right now where you can trade cryptocurrency. But some of these exchanges, some of them have been referred to as scam exchanges. Like you have the ones with little or no volume, or volumes actually manipulated. So how do we know which exchanges are actually good to use and safe for trading?
Oh, yes. So, personally, I've traded a couple of exchanges the past 2 years. And currently I'm settled with FTX Exchange for a couple of reasons. Right, the liquidity, FTX has one of the top liquidities on the market, as we speak. And then the track record, right, the team has to reconsider what goes behind this project or any exchange you're considering using. And also the fees, you have to consider what are the charges for trading on this exchange. The withdrawal fee, we see that some people pay as much as $10 to withdraw their funds, right? And why I choose FTX is withdrawals on most of the networks are free, right? And FTX has the lowest trading fee. Right, and then, one of the difficulties of choosing an exchange is security. Right, an exchange, FTX thinks the section has 100% track record in regards to that. No ARC record for the FTX. Right.
Okay, so if the exchange gets hacked, how do we, how are the users, protected in that kind of scenario?
Okay, so there are 2 ways, right? First, the exchange, you have to look at the insurance funds, okay, which we also call the backstop funds, all right? What securities does the exchange have in place? So let's say you get hacked and it's not your fault, it's the exchange fund, it's the exchange fault. Then you have to make sure that this exchange has some insurance on ground. And then to prevent hacks, from your own end, you have to put all the security measures which the exchange provides.
All right, Adebayo. Adebayo Juwon is a market analyst. Thank you so much for joining us on Business Morning.
Thank you so much, Daddy.
Thank you. All right, so price of Bitcoin, $57,188 as of this morning, down by 1.10%. 24 volume, $3.727 billion. Price of Ethereum, still 2023. Down about 3.32%. We're getting some pullbacks. Top alt, only BNB doing well in that front. We have top 5 gainers, WRX 38% up, Engine up about 26.97%. Then our chart coin for today is Chili's, price 46 cents. I'm actually watching this one. It's pulled back a lot from the previous high, about almost 1,400 sat. Now it's trading about 801 sat on the daily. I see a bullish MACD cross about to happen here. So this is actually one to watch. Chili's token on 1 hour chart. 1 hour chart, we still have a bullish momentum here on the MACD, but that histogram seems to be coming down. But we could get some news that could actually push this one. So Chili's right now is the coin to watch, Chimi and Ini at this point.
Watching Chili's. Well, I've seen a lot of the altcoins now going down, and we're getting into the weekend mode. Just wondering what will happen to the altcoin. You're talking about Chili's. So is that the coin?
This is actually what I'm watching right now because the charts actually look good. It's pulled back from its all-time high recently to about 801 sats. So that's about almost 40% pullback from the last high. And it's actually an NFT token. So you know how NFT tokens are doing this year?
A lot of people holding some of those coins would be wondering, when would they ever go up? And seeing Bitcoin come down
I think you should just follow the chart.
That's the thing with the crypto market. Is either you're using the fundamentals or the technical analysis or using both of them. Either way, you know the direction and when to enter and when to exit.
Why you advise us to watch the Chili's? Anyway, this is not a financial advice.
Not financial advice.
Very important.
All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwabu.
And I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.